However, the pattern is the same that macro discretionary used leading into the election. And so I'm saying that macro discretionary could be back, which would be a real pain in the ass for the bullion banks because it makes it harder for them to get the dip they want to buy.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. Today's market rundown, we'll be discussing the gold buyer being back. Hopefully he's back even after the data. We're recording this before the data at approximately 7:45 a.m. 10-year yields are 476, down 3. The dollar is 109.16, down 2. S&P 500 is 58.64, up almost 12. The VIX is 18.59, down a little bit. Gold is 26.84, continuing its recovery, up 7 and change. Silver 29.92, off the highs, up about 7.5 cents, 6 cents, depending on when you blink. Copper is 431. Unchanged bid. WTI 77.84, down 33. Natural gas 394, down 5. Bitcoin 96,872, finding a home between 95 and 100 right now, up 400. Palladium 955, up 16. Platinum 940, unchanged. They want the palladium again. I don't know why. Gold, silver, again, hovering below 90. Soybeans 1043, up 1. Corn 468, up 2. And wheat 552, down 2. Wheat seems to be the opposite of the other two. All right. Homepage. Yesterday, the COMEX silver EFP problem. That was a Sunday discussion for the founders that all the premium got to take a look at. We had our first guest, I guess you can call it an interview, discussion with Bob Coleman from Profits Plus, and he and I went into the depths of the EFP, implications for silver, and that was his area that he mostly covered, and I just touched on myself. I just touched on the structure of the EFP and how it functions with regards to spreads and short squeezes. Founder CPI prep, top left-hand side, we just sent that out this morning. CPI is probably out. The banks are looking for it, the bigger banks are looking for it a little bit higher than consensus. So if it came in higher than consensus, gold should be lower. If it comes in lower than consensus, gold and silver should be higher. The trick is good economic data should be bearish for gold. The unemployment number came in very good, meaning a lot of people were working or got jobs, and gold kind of ignored that. So as you're watching this, you're probably seeing a confluence of events. I think there's buying in the market. We'll be covering that. GoldFix PM, that covers everything else we did. All right, here we go. Discussion. These are notes to myself. We're going to go through very quickly using charts today. Pre-election buying pattern, China buying in November, December, post-election buying pattern, if it's there, and the buying pattern actually returns slightly, so pre-CPI. So let's do that right now. Let's make quick work of this. All right, there's something that I called a measured move, right? It's a common technical term that, when the market does this, the measured move would be that measure just extrapolated higher or lower. And one of the things that started happening in gold as far back as October of 23, which is when the Gaza war started, were these V-shaped bottoms, right? Technically, V-shaped bottom. Some people might call them bull flags, depending on where they occur in the structure. But the V-shaped bottoms lent themselves very easily to me for the measured move concept. Once we broke out of the cup and handle, right? These V-shaped bottoms started becoming more frequent. So basically, it's the rectangle, right? So it's a V, right? And when we get above where you determine the V sold off at or started, then the market extends the length of the V. So there's an example of the V, right? There's another example of the V, but this is current, okay? This is an example of the V working, an example of the V not working, Okay. But now we have the buying returning. This here is the buyer that I'm looking for. Okay. So I'm jumping around a little bit, but you'll see this. Currently, this is where we are right now. This is a 4-hour chart, right? This is a buyer. Obviously, the market's going up. Buyer backing off, buyer returning. Why do I say that? Well, because it's very algo in pattern, based on the wicks and the slope. 45-degree slope is your first sign, and then there's other things you have to look at. All right, so there is a buyer similar to the buyer that we had before the election. That's what I can take away from that. All right, here's the V-shaped bottom here's the V shape that I'm talking about post-election. Okay, the V shape did not work post-election. All right, so here's a V. There's a break of the top of it. Not quite. It went up, but not quite. Right, another V. It doubled it, but it was much slower than normal. Right, and here we are in a V. And this is where we are today. Right, on a 4-hour chart, done about at say 6:30. And the question is, if we break this, you're not long yet if you're speculating. If we break this, will we take this distance, measure that move, and extend it higher? Before the election, we did quite easily, quite regularly. After the election, we have not, which is consistent with less impulsive, less aggressive buying. However, we do have the buying back. This is the 100-day moving average going all the way back. And I want to go to this one. This is the 100-day moving average. There's the election. See this little error? I'm going to do this. I think I could draw here, can I? This is China buying. That's a fact, okay? Because they said they were buying in that month, and either they bought on the highs or they bought on the lows. So let's give them the credit for buying on the lows. This could be China buying. I believe it is. I'm not sure. But this area here is the area that I just showed you where the buyer returned. So either China is buying above the 100-day moving average. I don't think so. Or a macro discretionary fund is buying headed into data like unemployment, like CPI. I'm not sure. But the point is, macro may have returned to gold, which is always good to see. All right. So here we go. I'll give you a guide. Here's an idea of the V's. I should have done these charts first. Here's an idea of the V's working in the past. Here we are. October. This is October of 23. V, measured move. Okay. But it never really finished. I actually got long in this area here. But we never broke my support, which ended up being the 100-day moving average. And then we did another V within a V, and I went, oh, a measured move. We should go a lot higher. Anyway, we went to here, right? So there's your December 3rd thing. Here's another V. Once it broke, it ran. Once it broke, it didn't run. You can make the case it didn't break, but let's say it broke and didn't run. All right. Broke, run. Broke, 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 run, 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 run. Okay. This is the election. All right. The election happens. Big V, no love. Right? No love. Smaller V, no love. All right. And now here we are making these a series of little V's. So it's very, what's the word I'm looking for? It's very fractal. Okay. So before the election, these worked. By the way, it's very fractal means these were very good on the 1 hour and 4 hour and 2 hour charts as well. The daily is just easy to see in context of the before and after the election. So that's basically the whole conversation. So here we are now, right? Now let's go to a live chart. Sure, I'm talking about. Gold. Daily. All right. So here's that big V after the election, right? I had made the case because I didn't get long that it had to get above here to finish the V, and it never did. But anyway, it sucked. right? But it was a nice rally off the lows, right? And then we had another failed rally here. And then we got a little V, right? It broke here, and now here we are again. But when you go to the 4 hour, you start to see things like V break. Is it a V yet? No, it has to get. You're not supposed to be doing anything looking at my chart here right now. You're supposed to wait for it literally to get above here. Now, in a less complicated V-oriented term, you could say bull flag. I don't see that, but you could say bull flag. You could also say Elliott wave. 1, 2, 3, 4, 5. You can look at it that way. There's all kinds of ways to look at it. But I guess the moral of the story is the buying is back. Okay. It's not as aggressive. Okay. It's not as big and it's not causing as much of an impulsive spike uh, as it gets filled. That's because the market is less worried about an event like an election. However, the pattern is the same that macro discretionary used leading into the election. And so I'm saying that macro discretionary could be back, which would be a real pain in the ass for the bullion banks because it makes it harder for them to get the dip they want to buy. This pattern started before unemployment and it's now going again into CPI. The question is it short term or is it something bigger, longer term? I would tend to think it's bigger, longer term, but I want to see how stocks behave after CPI today in my uh, in my way of looking at things. All right, so there you go. That's it. That's the buyers are back. I'm telling you, the buyers are back. They're back. Are they visiting? Is it a slight return? Or is it a permanent return? But the bottom line is they're not playing Bitcoin anymore, right? They are playing oil. All right, moving on. News analysis found the CPI prep, gold's 2025 outlook. That's yesterday's post covering uh, a Bloomberg story that we saw and liked, and so we wrote something about it and added a couple charts to it. Founders, China's money is a growing problem for the West. This circuitously covers the area. Look, China's got a big trade surplus, yet their bond market is, very strong. So where's the inflation? Where should the inflation come from? And this is becoming an increasing discussion in our neck of the woods. And well, put it this way: if China, uh, whatever China is doing with that extra money, if they decide to do something else with it, it could really be inflationary. COMEX Silver EFP problem, we just mentioned that on de-dollarization. That's a piece that we wrote for a book by Jordan. Partnets 3333 gold in the next wave. Moving on. Geopolitics, politics. We're now in the end game for the Gaza peace talks, and the end game involves people saying they're not honoring their promises. They're not honoring their promises. And this is actually a very dangerous time, although the press won't pick up on it that way. But this is where people say, you know what, you guys aren't pulling out of Gaza. You guys aren't doing what you said you're going to do. The gradual uh, uh, communication collapses. So I'm not telling you to get scared, but I'm saying the IDF has not been instructed to change the methods of fighting in Gaza, despite the progress in negotiations. And uh, Israel is setting new conditions. This happens all the time, and so the end game could go on a long time here. All right, data on deck CPI, you know that, and Friday market check. Premium today is a piece on the gold silver spread. We haven't really looked at it in depth. We have the position on essentially, but the analyst notes that it's very good. Let's put it that way. The analyst notes that the old gold silver spread is close to 100, discussing the risks of it breaking that resistance, above 90, uh, and he's economically bearish, so he believes that stocks are going to drop and gold's going to rally, and as a result of that, he's trying to handicap which way really silver will go when you think about it. So it's very important, I think, from a technical and data oriented uh, perspective. All right. That's it. The markets are 5 and change. It's 8:02. I should sell copper. Or I should just get out of my position. Oh boy. All right, guys. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.